Hello and welcome to the Deep Dive. Today, we're going to unpack a company name you definitely recognize, Visa.
Absolutely.
You probably tap your card, almost every day, but have you ever really stopped to think what's actually happening behind that logo?
Probably not for most people.
Exactly. So we're about to uncover some genuinely surprising facts, some strategic moves that show how this financial giant is quietly shaping how money moves. Our goal here is to give you a shortcut, really, to understanding the power behind the plastic.
And that's spot on. You see, at its heart, Visa's purpose is about connecting the world. They want to do it through a payment network that's innovative, convenient, reliable, and crucially secure.
Right.
We'll explore how they're actually doing that, how they're empowering, individuals, businesses, even governments globally. And what's really interesting to me is this network of networks idea.
Yes.
It's not just marketing speak. It genuinely defines their role in this incredibly complex, fast-moving global payments world.
Okay, let's dive right in then. The engine room, as you called it. When I tap my card, what's the actual tech backbone making that happen almost instantly?
Right, the engine, that's VisaNet. It's their own proprietary global electronic payments network. It's the real technological core.
Okay. VisaNet, okay.
Think of it like the central nervous system for, well, billions of transactions. It handles the authorization checking if the funds are there. The clearing, which is basically getting the transaction data ready for the banks involved.
Okay.
And the settlement, that's the actual movement of money between banks all over the world. And the performance, it's incredible.
Yeah, fast are you talking?
Transactions usually complete in less than a second.
Wow. Less than a second.
Yeah, and security, multiple layers of defense. It's constantly analyzing over 500 data points on transactions in real time.
500 points.
Real time. This
Yeah.
helps stop something like an estimated $40 billion a year in fraud attempts.
$40 billion. That's staggering.
It is. And reliability. They've kept near 100% network availability for 15 years straight.
15 years. That's solid.
Extremely solid. Plus, the scale is immense. It can handle up to 65,000 transaction messages per second.
65,000 per second.
Per second. Annually, it processes around 80 billion transactions. And it's flexible, too, with domestic processing in over 100 countries.
Okay, 65,000 a second, near perfect uptime for 15 years. That's just a mind-boggling technical achievement. But what about the model itself? You hear about Visa's open network. What makes that so unique, so powerful? How's it different from a, say, closed-loop system, and what does that mean for how they operate and, frankly, their margins?
Right, the open network, that's a key differentiator. So think about a closed-loop system, maybe like American Express or Discover. There, one company might handle pretty much everything, issuing the cards, processing payments, managing the merchant relationships directly.
Okay, all in-house.
Exactly. Visa's different. They don't directly take on the credit risk, whether you'll pay your bill, and they don't manage all the direct merchant interactions. Instead, they let thousands of independent financial institutions, banks, credit unions, issue Visa-branded cards and manage those merchant relationships.
So they partner up.
Massively.
Yeah.
And here's the real power play behind that open network. Because Visa isn't carrying the credit risk or the huge operational weight of managing all those direct relationships, they can operate with incredibly low overhead.
Right. Less direct involvement, less cost.
Precisely. It's an asset-light model, and that's a profit engine. It lets them achieve these staggering operating margins, often north of 70%.
70%. For anyone listening who follows finance, that's truly elite territory.
It really is. It's core to their financial strength. And this openness, it also encourages innovation across their whole ecosystem, that global connectivity.
Yeah.
It's all supported by synchronized data centers, linked by something like 1.2 million miles of fiber optic lines.
Wow.
Processing over 150 million transactions daily across 175 currencies.
Okay, let's try and visualize that scale. A 70% margin is amazing, but give us a sense of the sheer size of Visa's global footprint. It sounds absolutely enormous.
It is enormous, no question. Visa connects around 14,500 financial institutions.
14,500 banks?
Roughly, yeah. And it's accepted at over 150 million merchant locations worldwide. Just think about that global reach.
Everywhere, basically.
Pretty much. As of early fiscal 25, there were 4.8 billion Visa payment credentials, cards, tokens, etc. out there globally.
4.8 billion.
And in fiscal year 2024 alone, Visa processed, get this, $233.8 billion transactions.
233 billion.
Which added up to an astounding $13.2 trillion in total payments volume.
$13 trillion just flowing through their network.
Exactly. And this creates what economists call a network effect.
Right. The more people use it, the more valuable it becomes.
Precisely. More users attract more merchants make the network even more useful for users. It becomes exceptionally difficult for anyone else to replicate that scale.
The huge barrier to entry.
A massive one. And all that scale. It also fuels their advanced data analytics and AI capabilities, which, like we mentioned, are crucial for fighting fraud and offering advisory services to their partners.
Okay, this is where, for me, it gets really interesting. We all know Visa from our, plastic cards, credit or debit, but clearly the company's way more than that now. How is Visa diversifying its revenue beyond just those traditional card swipes?
Well, their basic model is still fee-based. That hasn't changed fundamentally, but what they charge fees for is definitely broadening.
Okay.
Their core revenues still include service revenues. Those are fees from banks for just participating in the network and processing transactions. Then you have data processing revenues for those key steps. Authorization, clearing, settlement.
The mechanics of the transaction.
Exactly. And then there are international transaction revenues. These are high-margin fees from cross-border payments, and they get a direct boost as global trade and travel increase.
Right, those currency conversions and international fees add up.
They do. But the strategic evolution is key here.
This seems crucial. What exactly are these new flows and value-added services, or VAS, that you hear them talk about? Why are they so important for Visa's growth now?
Right. New flows and VAS, they're crucial because they let Visa move beyond the traditional consumer-to-business or CDB card transaction, you paying a shop with your card.
Got it. Standard purchase.
New flows refers to things like business-to-business, B2B payments, or person-to-person P2P payments.
Like businesses paying suppliers, or me paying a friend back.
Exactly. These are huge markets, often still relying on older methods like checks or bank transfers, less digitized where cards aren't always the main solution. So, massive opportunity there.
Makes sense. And the value-added services.
VAS, yeah. These are services built on top of the core network. They deepen the relationships Visa has with its clients, the banks, the merchants, the fintechs, and they create new, often high-margin revenue streams. It's about leveraging their unique position at the center of all these transactions.
Okay, so can you give us some examples? What kind of services are we talking about?
Sure. Let's break it down. On the issuing side, helping the banks that issue cards, they offer things like Visa DPS for processing, digital card issuance tools, loyalty program support. They even bought a company called Pismo to expand these capabilities.
Okay, helping the banks innovate.
Exactly. Then for acceptance, helping the merchants accept payments, think about platforms like CyberSource and Authorize.net. These help businesses manage online payments, deal with fraud, even handle disputes more efficiently.
So tools for the sellers.
Right. Then there are risk and identity solutions. This leverages all that transaction data they see to provide real-time fraud prevention and better ways to authenticate users. Very important.
Using their data advantage.
Absolutely. They also have advisory services, basically a global consulting arm using their data and insights to help partners. And then there's open banking solutions.
Ah, open banking. That feels like a big shift.
It is. It's about allowing you, the consumer, to securely share your financial data with other apps or services you trust. It could be for simple things like verifying your account, or even initiating payments directly from your bank account to another, what we call account-to-account or A2A payments.
Skipping the card rails sometime.
Potentially, yeah. And finally, they have commercial solutions tailored specifically for businesses, small business cards, corporate travel cards, virtual cards for safer online B2B payments, and solutions to automate accounts payable, often through partnerships like the one with BillTrust.
Wow, that's a really broad suite of services. It really paints a picture beyond just the card transaction.
It's about embedding themselves deeper into the entire payments ecosystem at every single touch point.
Let's zoom in on one specific platform you mentioned within these new flows, Visa Direct. What is that exactly, and how is it changing how money moves?
Visa Direct is really pivotal. It's designed for moving money domestically and cross-border, but going beyond just that typical consumer-to-business card payment.
Okay, so not just buying things.
Right. It lets clients, businesses, governments, fintechs collect, convert, hold, and send funds across a massive network. The potential reach is over 11 billion endpoints. That includes cards, bank accounts, and digital wallets globally.
11 billion, that's a most connected accounts, right?
Pretty much. It integrates powerful tools like Visa B2B Connect, which is designed for high-value B2B cross-border payments.
Okay.
Visa cross-border solutions for remittances and disbursements, and capabilities from their acquisition of Currency Cloud, which is strong in FX and multi-currency accounts.
So bringing different money movement pieces together.
Exactly. And partnerships are key here, too. Think about their work with Airbnb,
Oh, yeah.
enabling hosts to get their earnings much faster directly to their eligible cards or accounts via Visa Direct. Or their partnership with Tunai.
Today.
Yeah, Tunai helps expand Visa Direct's reach into digital wallets. They connect to something like 1.5 billion digital wallets across 78 different providers, especially in emerging markets.
So really pushing into wallet payments, too.
Absolutely. It's all about making money movement, regardless of the type, as simple and fast as, sending a message.
It's clear Visa isn't just resting on its laurels. They're leaning hard into the future. What are some of the key cutting-edge technologies they're really embracing right now? How are they using them?
Well, artificial intelligence, AI, is huge for them. They've made substantial investments.
I bet.
AI is embedded in over 100 of their products now, mostly focused on fraud prevention and cybersecurity.
Makes sense, given their data.
Exactly. Their main AI tool, Visa Protect, they say, can detect about 50% of fraudulent transactions that older traditional systems might miss. The projection is it could cut fraud losses by up to 30%.
That's a significant impact.
Huge. And they've backed it up, invested $3.5 billion just rebuilding their data platform specifically for AI. They also use AI internally for things like customer service and developing new AI-based tools, APIs, for merchants and fintech partners.
So AI is deeply integrated. What else? Blockchain, crypto.
Yes, stablecoins and blockchain are definitely on their radar. They're actively tailoring a strategy, especially for emerging markets, using these technologies to speed up payment digitization. They're testing stablecoins for potentially faster, cheaper cross-border payments.
Interesting. So they see a role for stablecoins.
They do, but maybe not how you'd first think. They're building what they call a multi-coin and multi-chain foundation. That means supporting different blockchains like Solana and Ethereum and different stablecoins like USDC or PayPal USD, often working through partners like Paxos.
So being agnostic to the specific coin or chain.
That seems to be the goal. And crucially, Visa aims to monetize the movement of these stablecoins, not compete with the stablecoins themselves. They want to provide the value-added services around it, things like identity verification on-chain, fraud analytics for stablecoin transactions. They want to be the secure bridge between stablecoins and traditional finance, or fiat currency.
Got it. Facilitating, not replacing. What about tokenization? We hear that word a lot.
Tokenization is absolutely critical for security. The Visa Token Service replaces your sensitive cardholder data, your 16-digit card number, expiry date with a unique digital identifier, a token.
So the real number isn't exposed.
Exactly. If the merchant system gets breached, the tokens are useless to fraudsters. They've already provisioned, I think, over 11.5 billion network tokens globally. It's a massive security upgrade.
11.5 billion tokens.
Yeah.
Wow. Any other innovations?
Oh, yeah. Contactless payments, tap to pay is huge. Penetration is over 90% in nearly 60 countries outside the U.S. now.
Still catching up a bit in the U.S. sometimes, but dominant elsewhere.
Very much so. They're also exploring things like wearables, even cars, as potential points of sale. And there's the Visa Flexible Credential.
Flexible credential.
Yeah, the idea is to unify multiple funding sources, like your debit account, your credit line, maybe even loyalty points under a single card or digital credential, giving more choice at the checkout.
Interesting. One card to rule them all, sort of.
Sort of, yeah. More flexibility for the user.
It's fascinating how they're building these bridges, connecting traditional finance with all these emerging technologies. But you mentioned partnerships multiple times. It sounds like innovation isn't just happening inside Visa. These alliances seem absolutely vital. What kinds are they forming?
You're right. Strategic partnerships are a cornerstone. They're crucial for expanding reach, adding new capabilities, and just driving innovation faster than they could alone.
Makes sense. Examples.
We see collaborations across the board. With fintechs, like their work with Klarna on flexible debit options, the Pismo acquisition we mentioned, or investing in companies like Conductor in Brazil to boost processing there.
Right. Fintechs are key.
For digital currency and blockchain, they're partnering with firms like Bridge to enable stablecoin-linked cards and Paxos for stablecoin settlement support.
Building those bridges again.
Exactly. On the broader money movement front, alliances with giants like Western Union and PayPal helped expedite cross-border transfers. They're even working with Goldman Sachs on treasury solutions for businesses using Visa B2B Connect.
Covering all the angles.
Pretty much. And they also partner specifically for financial inclusion. For instance, working with USAID and the GSMA Mobile for Development Foundation.
What's the goal there?
To advance digital financial access and literacy in places like Africa, Asia, and Latin America. These collaborations let Visa move faster, get into new markets or payment types, and offer specialized solutions that meet these really specific, evolving needs. It's all about expanding that network of networks through smart alliances.
Yeah, that makes perfect sense. And that focus on financial inclusion connects directly to market expansion, doesn't it? Where is Visa concentrating its growth efforts globally? How does inclusion fit in?
They are heavily focused on emerging economies. Asia-Pacific, Latin America, Africa. These are key growth areas. Just look at Q2 2025 results. Transaction volume in Asia-Pacific jumped 25% year over year. That's strong growth.
25%, yeah.
And Africa is a major focus. They announced a $1 billion investment in South Africa alone. That includes building their very first data center on the African continent.
$1 billion in South Africa. That's serious commitment.
It is. They're targeting Africa's digital payments economy, which is projected to hit something like $1.5 trillion by 2030. Huge potential.
And the financial inclusion piece.
It's directly linked. Initiatives with partners like USAI or Women's World Banking help bring underserved communities into the formal financial system, promoting access and financial literacy. And this is where emerging tech, like stablecoins, could play a role too.
How so?
Well, in markets where traditional banking infrastructure might be lacking or expensive, stablecoins could potentially offer faster, cheaper transactions, kind of leapfrogging the old systems.
Interesting. A way to accelerate access.
Potentially. And it's worth remembering, globally, electronic payments only overtook cash transactions just a few years ago.
Really? That recently?
Yeah. It shows there's still substantial room for growth, especially in these high-growth regions where they can bring more people and businesses into the digital economy for the first time.
Okay, so after covering all this ground, the tech, the scale, the new services, the expansion, what does it all mean for Visa in today's competitive world? Who are they really up against, and what ultimately gives them that competitive edge?
Well, it's definitely a highly competitive industry, no doubt about it. Their main rivals are the ones you'd expect. MasterCard, of course.
Yeah.
American Express and Discover with their different closed-loop models. China's UnionPay, which is massive domestically.
Right.
Plus, you always have emerging alternative payment networks and even potentially cryptocurrencies vying for different pieces of the pie.
So a crowded field.
It is. However, Visa maintains a really dominant market share. Globally, they lead in credit cards with about 37% of cards in circulation. And in the U.S. market specifically, their share is even stronger, about 52% of credit purchase volume and a whopping 74% of debit and prepaid purchase volume.
Wow, 74% of debit and prepaid in the U.S. It's huge.
It's dominant. And their competitive advantages, the moat around their business, really come down to a few key things we've touched on.
Let's recap those.
First, that unparalleled scale and the network effect. Just incredibly difficult and expensive for anyone to replicate. Second, their brand recognition. Decades of building trust, reliability, security.
Yeah, the Visa logo means something.
It does. Third, that truly global footprint operating in over 200 countries. Fourth, the relentless focus on innovation, embracing AI, stablecoins, tokenization. Fifth, that incredibly efficient, high-margin, asset-light business model we discussed.
To 70% margins, yeah.
And finally, those strategic partnerships across the entire ecosystem, strengthening their position constantly.
Okay, that's a powerful combination. But with all these new technologies popping up, new competitors trying different angles, how is Visa adapting its core strategy to stay not just relevant, but actually ahead of the curve?
Their strategic response really boils down to two main things, I think. First, consciously diversifying their revenue streams into those new flows, B2B, P2P, government payments, and building out those value-added services. They're not just relying on consumer card swipes anymore.
Moving beyond the core.
Exactly. And second, they're fully embracing this open platform approach, really acting as a network of networks. What that means is they want to facilitate payments no matter how they start. Whether it's initiated by a traditional card, a digital wallet, a stablecoin transaction, or even a direct bank transfer, like A2A.
So, being the rails, regardless of the train.
That's a good way to put it. This adaptive strategy lets them monetize the movement of funds across all these different digital forms. It ensures their continued relevance, their centrality, and hopefully their leadership well into the future, whatever that future looks like.
When you look back at Visa's whole story, what really stands out to you about this journey? From being basically a company built around a physical card to what they are today, this comprehensive payments technology powerhouse.
What truly stands out for me is that profound transformation itself. They really have evolved from just being a card network to being a full-fledged payments technology company. It's that combination of their deeply entrenched, massive global network, which gives them scale and data, to combine with continuous innovation and these really adaptive strategies, like embracing new flows, new tech, acting as that network of networks. That combination is genuinely what underpins their enduring leadership in such a rapidly changing industry. They're not just reacting, they seem to be actively shaping where payments go next.
Okay, a final thought for our listeners then. Given everything we've discussed, Visa's expansion into all these diverse payment methods, new markets, new technologies, how might your own interactions with money, from buying a coffee to sending funds across continents, how might that continue to evolve? How much more integrated could it become into these digital ecosystems over the next, say, decade? And what kind of new innovations might we even see next that we haven't thought of yet? Something to ponder.